11:15 right now on the West Coast. So it's still morning over here and afternoon everywhere else, in the country. So good afternoon to some of you, good morning to the rest. Going to talk about dollar funding stresses in China today. Now, I left a link down in the description to this Federal Reserve Bank of Boston working paper. It's called Dollar Funding Stresses in China. This thing was, let's see, the last date on this thing was November 1st of 2022. So it is fairly recent. But holy moly, just reading some of the first few things that, they have listed inside of this working paper are just really incredible to try and wrap your head around how much demand there's going to be for dollars if you just kind of consider what has just taken place here in China and knowing that there is a lot of this happening throughout the rest of the world. Now, just reading some of these things inside of here, right? Like the very first paragraph, the need for U.S. dollar funding during the financial stresses in mid-March of 2020 as the COVID pandemic news shocked markets was evident in the number of countries. Notably, however, China's dollar liquidity needs received little attention. Given China's significant economic and financial linkages to the United States and the rest of the world, financial instability there could have implications for the global economy. Hence, it is useful to develop a deeper understanding of the dollar liquidity needs of Chinese banks and non-financial corporations and to probe whether existing avenues of dollar funding for banks and other firms in China are sufficient in times of stress. This is our objectives. Now, this is what, like I said, this is coming from this working paper out of the Boston Fed. But some of the things, if you just kind of read through it, it's a fairly long, kind of paper here to read through. But just some of the things that they are talking about inside of this makes so much sense to, when you consider how much demand for dollars exists out there. It's very difficult for a lot of people to wrap their heads around when you think about the BRICS nations saying that they're getting out of dollars. Right? They're getting out of it. They don't want to do dollars anymore. They have no plans on dealing with dollars. Now that seems to be the common narrative when they're talking about doing the international transactions. They want to do their exports, imports. They want to do those things outside of the United States dollar. They're doing them in their own sovereign currencies. Yeah, all that stuff has taken place. However, the debts that these nations are taking out, they're doing it in dollars. Right? Now, every single one of these BRICS nations, like Brazil, India, China, South Africa, all of them, right? Maybe not Russia right now because of the sanctions that are hitting them, but all the rest of these nations and those who are even getting involved with these BRICS nations, all of them are taking out dollar-denominated debt. I just recently did a video covering that particular topic. Some of these other things, listen to this, right? This is the extent of Chinese dollar-denominated debt. Heavy global reliance on dollar-denominated debt has been a phenomenon for some time, right? Like a lot of people think, nobody wants dollars. That's not true, right? It's been for some time that they've been taking out a lot of dollar-denominated debt. These debts are due in dollars. Non-U.S. banks commonly issue short-term dollar liabilities and did so even before the run-up to the global financial crisis. Many non-financial firms in foreign countries also finance some of their activities in dollars. All right? See, all these nations, they all want dollars because everybody is willing to accept dollars. Obviously, there's some people who wouldn't, but almost everybody is going to. The dollar liabilities of non-U.S. banks have now surpassed their 2007 level, as shown in Figure 3. There's some charts down in here. And like I said, I left a link down to this down in the description. Reproduced from the IMF 2019. They list a bunch of names here, I guess, of the people who worked on it. And the IMF point to an increased extent of dollar borrowing by foreign entities, including non-U.S. banks, non-bank financial institutions, and operating companies, right? Again, these are people who have nothing to do with the United States, not our governments, not our banking systems, not our corporations, nothing, not the people or anything. These are all outside of the United States, and we may not even know that they're even doing it. Creating demand for dollars outside of these, we don't even know these contracts exist. I'm sure the Federal Reserve knows a lot of these, especially when it comes to like these sovereign debts that are issued out in dollars. But a lot of these corporations, do they know? I mean, it's a shadow banking system that's going on out here. These are non-US banks, non-Chinese banks. These are just corporations that are doing this. All right. Let's see. The outstanding quantity of dollar-denominated international debt securities and cross-border loans is 26% of the global GDP and is 50% of the outstanding debt securities in all currencies. Wow. I mean, holy moly. Just trying to wrap your head around that part of it. The outstanding quantity of dollar-denominated international debt securities and cross-border loans is 26% of the global GDP. That's huge. That's a lot, right? I mean, as far as like somebody who's going to step up and try and replace the dollar doing that amount of the, I don't see it, right? I don't see it happening. So again, I mean, I don't know if I should keep reading through some of this stuff. There's probably so much that we could read through on here. Factors that support the global reliance on dollar funding include complementary between dollar trade, invoicing in dollars as a safe haven, a preference among global investors for dollar-denominated fixed income assets, and an independent central bank, the Federal Reserve. China's dollar-denominated debt is primarily issued by its banks, corporations, and local government financing vehicles. The latter two categories are often lumped together. Before providing a rough sense of the magnitudes of dollar borrowing by Chinese entities, we emphasize the incompleteness of the available data. They don't know. They don't know how much exists out there in dollar-denominated debt. It said it right there. They don't know, right? Because of the incompleteness of the available data. For example, the currency denominated of debt issued by Chinese entities is often not reported or is reported inconsistently. Maturity information is typically difficult to find. They don't even know. They don't even know when this moment will come when all these debts come due, and they don't even know how big it is. See, this is one of the reasons. This is just China, right? This is just China that they're talking about. I mean, think about all the rest of the nations of the entire globe. Now, yeah, China's a significant one, so it's probably important to look at that. But this same thing is happening throughout the rest of the economies throughout the globe. There is going to be huge dollar funding stresses hitting the market if the Federal Reserve does not print at a pace that is fast enough to cover all these debts. That is mind-blowing to even try and wrap your head around. So many people feel that the Federal Reserve had gone too far with their money printing. I don't think they have when you think about how much debts that they need to cover, that all these dollars need to cover. Right? I'm not saying like the Federal Reserve is doing a good or bad thing. I'm not trying to say that at all. I can care less, right? But at the end of the day, when I read stuff about like this, what's going on in China, it leads me to believe that there is going to be a demand for dollars far bigger than what anybody has even anticipated. They don't know how big it really is because it's difficult to find the maturity information and the incompleteness of the available data. I mean, this to me, this is like mind-blowing kind of stuff. Like most people don't even consider this kind of information whatsoever when it comes to the demand for dollars. Like they just look here in the United States and they just have, oh man, cash is trash kind of narrative thing going on, but the rest of the world doesn't feel that way at all, right? And everybody, I mean, I don't know how to say it, but everybody around the world knows that except for the people in the United States. It's just crazy to think. Okay, let's read some of these comments here before we get too far. Cheers, UE. Thank you very much. Who is that? Segamonofo? Hey, Brody, good to be here. Great to see you here, man. I'm glad you're here. All right. All-nighter. What's up, brother? All right. Midwest Cannabis. Great to see you up in here. Calling 7 on the dice. Nice. Hello, you uneducated rebels. Yes, absolutely. Ready for a dose of economics. Great to see you. Self-education. All right. What's up, all-nighter? I was watching some of your videos on TikTok. Good videos. Yes, absolutely. Take a moment to go. I'll go get a link for it and put it down in the description of this video. It's the logistician. I'm sorry, all night. Put a link to, if you can. I don't know if you can put links in the comment section of this one, but at least put your name for the TikTok, and I'll go get a link for it and I'll put it in this video. Please go check out All Nighter's TikTok channel. He's doing a great job, consistent with the videos, putting out really good information, especially a lot of the stuff when it comes to the sovereign citizen kind of aspects. Really good stuff. So yeah, I definitely would love to see his channel grow, and I'd love to see you guys go and show him some love by checking out some of his videos and giving it a like. Okay, Hail Nighter, hey, are you counting 6 plus 1? Hey Wayne, hey Richard. Greetings, Simon and friends. All Nighter, Hider, hey All Nighter, Mr. Midas, yo Hider. I am Brody. Okay, no one knows each other's books, but we can kind of feel a pulse, you know? November 22 is recent. No, it's not recent, but you also have to think that this is information that is decades old, right? This is going on for a very long time. I mean, they're talking all the way back to 2007 on some of this stuff. So this is an ongoing problem that is constantly growing and getting bigger. Now, I mean, if you need information that is like from today that still talks about the issues that are at hand, I mean, this stuff is just as good. I mean, this stuff didn't go away. So, you know, looking back at like Federal Reserve speeches from the past can give you a really good understanding of what it is that they are trying to do today. Like, I mean, I constantly go back to monetary policy strategies for a low neutral interest rate world, and that thing was written November 30th of 2018. I mean, I keep a copy of it right here. I read it constantly, always looking over this thing going, man, do I see any, anything that, is taking place today that was a major problem for the Federal Reserve back in 2018, and man, do I not find them. Right? Like, I mean, just take into consideration today's three main global trends appear to account for the bulk of decline in the neutral rate over the past quarter century, right? This was a problem, was the neutral interest rate had become too low. One of them is demographics. Populations are aging and people are living longer and birth rates have fallen. This was one of their problems, was demographics, too many old people, right? They say it right. I mean, they don't say it straight up, there's too many old people, but basically that's what they're saying, right? One, populations are aging as people are living longer and birth rates are falling. All right, so that was a problem for them. Too many old people and not enough young people being born. Well, during the pandemic, a lot of people died. Like, I didn't keep track of any of these statistics, but I heard from other people out there that a lot of people died during COVID. Now, that was one of the issues. One of the three main global trends appeared to account for the decline in the neutral interest rates, which was one of their problems, happened to be demographics. Old people dying off was kind of helping them, right? I mean, I'm not trying to be accusatory or anything like that. I'm just saying, if you look at it, old people passed away during the COVID thing, and that was one of the issues that the Federal Reserve was talking about back in November of 2018. It's important to read this, right? What was one of the other things? The second, productivity growth, which has slowed around the world. Well, when you have a dramatic push down on manufacturing, like we have experience in the redistribution of the manufacturing base that is occurring, you can know that sometime here in the future, manufacturing is going to ramp up and we're going to have global growth again. They literally hacked the legs out of manufacturing. All right? And so now the opportunity for growth is here. You think about it, if you burn out all the dead undergrowth, how much room for new growth can happen, right? That's what was going on here, was a clearing out of the bad undergrowth. It's a very, Austrian economics, Austrian School of Economics thought, which a lot of people don't believe still exists out there, but it does. The Federal Reserve is using free market to fix the problems that are out there. I'm not giving them praise for it or anything else. It's just that they need to clear out, the bad debts. And this is the way you do it, by raising the interest rates and making it painful for these people to continue to operate. And the ones who are more viable companies will stick in the economy, and those who are not will fade away, right? So again, global growth was one of the issues. I think that's being solved at this time right now. And then the third one, heightened demand for safe and liquid assets, which has led to a wider wedge between yields on safe government securities and the central bank reserves and yields on riskier assets such as corporate bonds. So basically what he was saying there is that there was, how much time do we have? Okay, we got millions. So what they were basically saying there is that the yields on government securities was really low and corporate debt was really high, and that gap was too much, right? Now, I mean, a lot of people will be like, why is that? And I'm going to try and explain it at least in the simplest way that I can to make it most understandable. And this might be a little oversimplified, but if you have a wide gap between the yields on treasuries and the yields on corporate debt, the moment that the Federal Reserve tries to stimulate the economy by buying into treasuries to make the financial markets out there more accessible to the people with lower interest rates. Does that kind of make sense? Well, if you try to lower interest rates when there is this wide gap, the impact to the corporations is very small, right? Because that gap is so wide. Now, if it was very narrow and all of a sudden you drop the interest rates on the treasuries, making the yields on the corporate debt far more attractive as you start to widen this gap, what you will do is cause investment into the corporations. Those who are looking for fixed income returns will see that the corporations are now providing a better return as the treasury yields are falling. But if they are already low, how do you stimulate that? You can't. So this wedge between the two was too wide. They wanted to narrow that. Totally worked, right? They have higher interest rates on the Fed funds level. All the U.S. treasuries had moved up, and the corporate yields, although they had gone up as well, had narrowed that gap. I mean, it really narrowed the gap during the pandemic as people were actually diving into the corporate debt, trying to find any kind of return that they did, and they drove the yields down closer to the U.S. treasuries. Now, as those U.S. treasury yields are moving up, that gap is definitely been depleted, is much smaller than it was. All the problems that John Williams was talking about back in November 30th of 2018 are somewhat being solved now. Right? Three main trends appear to account for the bulk of the decline of the neutral interest rate. Those three trends have pretty much reversed or being reversed at this time. They don't talk about that now. Like, you look at all the speeches, you might find a little bit. I think Michelle Bowman kind of talked about it a little bit in her last speech. I don't know if I have it in here or not, but I would have to go and take a look at it because they don't necessarily talk about those issues, especially like things like the demographics issue, like that no longer an issue for them, And so it's important to read these things, especially the ones from the past, or know what they said from the past so you can kind of really understand why it is that they're doing the things that they are today. One of the things, like another one just recently, I'm really going off. How much time we got? 17 minutes. Okay. One of the other things, like, everybody was under the impression a few weeks ago that the Federal Reserve was going to be lowering interest rates coming into this 2024 year. They're using this dot plot map for their reasoning behind it. Nowhere did the Fed state that they were going to be lowering interest rates. In fact, nowhere can I find anywhere within anything that said that they were going to be lowering interest rates. Some of the Fed members have stated such things, but that's not a direct statement coming from the Federal Reserve. Is the opinions of some of these, individuals who work at the Federal Reserve, right? There's 12 voting members with 5 alternates, right, to the FOMC. These are the voting members of monetary policy. Now, Lori Logan is kind of popular right now within the mainstream media because I don't know if she put out a speech or maybe a statement or something, but she seems to be all over the mainstream media right now with a lot of articles that are being written saying that she's not one of mind to believe that there's going to be lower interest rates. In fact, she is of the opinion that there could be a raising of interest rates going into the future. That if there is any kind of uptick in inflation, that they may have to either continue to keep the interest rates elevated or may have to actually raise them. She is a voting member of the FOMC. Right? This is her opinion. John Williams had something very similar to say, right? Voting member of the FOMC. Who was it? It was somebody else who had come out. I can't remember. Oh, Christopher Waller said something very similar. Again, voting member of the FOMC. All these guys have come out with public statements of their opinions. Now, again, this is forward guidance, right? This is jawboning. These are credible threats. Now, I wouldn't take these people's opinion to heart. I would look at what they are saying as what it is that they want the markets to believe. That's the difference, right? Because what they are trying to do is get the markets to behave in a fashion that is going to be most appropriate for their monetary policy. They can actually get to a point where just simply using their words will have the same impact as adjustments on their Fed funds rates. And that's what we have experienced here just recently. I mean, just look at what happened to the market soon as that dot plot thing came out and all that mainstream media attention to it. I mean, all of a sudden there was a rally going on in markets. People were excited about this idea. And it's just like all of a sudden now there's a reverse of this idea. Like it's all rumors, credible threats, jawboning, forward guidance. What's important to do is to go back into their speeches, into their monetary policy, into the understanding of what it is that they had planned on doing prior to the pandemic, during the pandemic, and now that the pandemic is over and they're trying to reestablish their monetary policy in a fashion that is most appropriate for their inflation targeting scenarios and unemployment levels. It's very, like, all this stuff is so difficult to wrap your head around, but once you have internalized the information, it seems so easy. Like everything like start to make sense in a different way. Like, people who don't understand necessarily the demand, like the dollar funding stresses, like what's going on in China with this report. Like, if you don't understand any of that stuff that's happening there, it makes it very difficult to understand how it is that there's going to be dollar demand going into the future. Like, if all you're looking at is the United States and the monetary policies and the economy here, and not looking outside of the United States for how many people are actually using the dollar to continue their operations, like Brazil, like Turkey, like South America or South Africa, like all these nations are still using dollars. No matter how much people want to say, man, they're getting out of the dollar, they're not, right? They're getting out of the dollar to do international trade, but they're not getting out of the dollar to get their funding. They are definitely still using it. Yeah. All right. I got a few more minutes here. Do we have any questions we want to hit? I got like 8 more minutes. Do you think deglobalization will take hold widespread or only on a case by case basis for intellectual property reasons? I mean, I don't know what, like, to become more like isolationist, like, to stop doing global trade with each other. I don't think that's going to take place. I mean, as communications and distribution and all that other stuff becomes bigger and more efficient, it can only lead to more trade throughout the globe. Now, there is a resetting, right? The great reset of manufacturing bases to more efficient places. Natural resources are finding new partnerships and stuff like that. So there is like complications that are going on within it, especially since the pandemic. But there will be a reestablishment of all this stuff, and we are going to have global trade again. There's very little doubt in my mind about it. And then whether or not, like, I mean, whether or not the dollar is the dominant, like, currency for doing international trade, I mean, there's obviously an effort to try and get out of the dollar for doing that global trade. but but the problem with that is that you can do it, but it's going to create other problems going into the future, right? And that's really, like, difficult to try and, like, wrap your head around. It's just like, what other problems can start coming from this? And mainly it comes from the fact that you are going to accumulate a currency that some other people may not want, right? If it's a sovereign currency that you are accepting from this nation and not dollars, and you get a bulk of it, and the only nation that will accept it is that nation, nobody else, then what good is that currency? Okay? And then if you want to convert it, if you start selling that currency, what you are basically doing is setting it on fire, because you are going to start losing value on it as the selling of that currency, devalues it. It's very difficult, right? Very difficult to operate within your own sovereign currencies outside of using a world reserve currency like a dollar. I'm not saying that it can't happen. What I'm saying is that it creates issues that start to magnify themselves the longer it goes on. And that's one of them. I mean, Russia and India are a great example of that right now. DOGE is a hot dog. Smash the likes my ninjas. Yes, absolutely. The dollar is international heroin. Yeah, it really is too. All right. You Let's see here. How will this affect the dollar value? On one hand, dollars are needed to print. On the other, are needed to print. On the other, will printing continue to dilute the value of the dollar? It's yes, like the value of the dollar is going to diminish. Like don't like to me, okay. I'm not trying to tell you how to look at it, but to me, I don't look at dollars as a value. I look as a dollar as a transferring of my efforts over to another service or asset or commodity or something, right? I don't look like, I mean, all these dollars need to hold value for some. I don't look at it like that anymore because dollars don't hold value. They're not like, not since we ended the gold standard did the dollars hold value. We want them to. Like, we want to be able to hold on to dollars and say, man, my efforts in order to earn these things, I wish they like preserve that for the future so then I can use it. Unfortunately, it just doesn't work that way. I mean, that sucks. What are you going to do about it, right? I mean, it's just like the dollar doesn't hold value at all, right? It's not meant to. And so, I mean, there was a time when it did, and as much as we wish and want and pray that it should, it's not going to. It's not going to work like that. So it's important to understand that, when you get dollars, that you have to have intent for them. Like, they have to go somewhere, whether you invest it or plan on, maybe taking a position in cash to say, yes, in the future, I'm going to be able to pick up these assets at a cheaper price. But nowhere in my mind anyway, do I hold on to dollars thinking, man, at some point I'm going to preserve this for the future, because then I'll like have saved my efforts and time and everything within these dollars. It like that doesn't, like, I don't think that way at all. So to me, it's just like, it's more of like the transferring. Like, I got to put out effort in order to acquire these things so that, and I can use that to acquire the assets and services or whatever it is that I need in life. But to hold on to that for any kind of length of time is not going to be any kind of store of value. It's more of like a timing issue if you do hold on to it. So yeah, I mean, at the end of the day, there's going to be, the dollar is going to continue to devalue for forever. That's okay. Then keep your hands off American dollars. Problem solved. No, that is the problem. See, the problem is that if you don't use American dollars, if you don't use the United States dollars, then what you're going to end up doing is accumulating a currency that nobody else wants. This is the problem that India and Russia faced, right? Like, India is just like, you know what, screw it, we can't do with this Russian thing anymore. Like, they're having payment problems, right? So India is going to Saudi Arabia and saying, hey man, we can't deal with this Russian oil anymore. It's just like, it's too much of a pain in the ass, right? Now, if they were doing the deals in dollars, which Russia can't, but if they did, then there wouldn't be any problems, right? Everything would just be flowing smoothly. And that's the problem that they're going to face, that they can't just exit out of the US dollar. I mean, just look at, like, Brazil right now has just issued out, I forget, billions. It was, I don't even know how many billions of dollars in 10-year bonds. These are Brazilian bonds, 10 years, 10-year maturity, billions of dollars, US dollars. If they do not sell their exports for dollars, how do they plan on getting dollars without borrowing more? I mean, they could always borrow more into the future again, but how is it that they plan on paying these bonds back? Right? They have to get dollars. They have to acquire them from somewhere, somehow. And the easiest way is to sell stuff to the United States, right? That's the easiest way to get a hold of those dollars. And so, as these nations are accumulating or issuing these debts in dollars, I'd sit back and go, you're going to need those dollars in the future. There's going to be a demand for them. And the Federal Reserve right now is in quantitative tightening, making it more difficult right now to acquire the dollars to pay back those debts. Now, I do believe at some point the Federal Reserve will go and expand the money supply again at some point. But right now, that's not the case. That's not what they're doing. But yet, nations are going out there and borrowing money in dollars with the promise that they will go and get dollars in the future to pay these things back. And the Federal Reserve is taking the dollars out of the economy. What does that, I mean, just put those things together, and what does that say for the strength of the dollar? Right? I mean, if you add all that stuff together, put that all into the blender, mix it up, and what do you come up with? Dollar demand. right? And it's going to increase. All right, 190 people watching. I'm going to be ending the live stream here in just a second, so we're 30 minutes into it. All right. Good morning, all you salty berserkers. All right. I'm only seeing Bitcoin at 46,839 on my Trezor dashboard. Smoke that like button. Yeah, I'll give you a few minutes. If we got 193 people watching right now with 53 likes. Let's stay out here for another 5 minutes. We'll answer some questions. Take a moment, go and hit that like button. If we could get that up over 100, that would be awesome. When I go to upload the video, people are going to see how many likes we have to the views that was received on this video, and they're going to say, hey man, this is a great video, let's go and check it out. So the more you hit that like button, the better it is for not only the algorithm, but for the channel and for more people to come in and really kind of participate in this discussion. I mean, this is funny. This isn't like something that I just kind of fabricated one day to try and come up with this concept that is going to be so different from everybody else. This has been manifested from their own documents, from me reading and trying to understand their monetary policy, their strategies, their efforts. This is what I've come up with from the theories of it. Like, I didn't learn economics by going to school. I didn't learn from, taking any kind of classes or from somebody else. I literally started picking up information wherever I could. And most of it came directly from the Federal Reserve itself, right? As far as, reading their speeches and trying to understand what was being said in there, I would have to break down all the little parts and components of these speeches in order to understand what it was that was being said. And by doing that, I picked up a lot of what I feel is the idea of what it is that the Federal Reserve is attempting to do. I'm not trying to defend it. I don't like the Fed. I don't like the issues that we have that come from it. I'm not really mad about it either. I'm not happy or sad or anything. To me, it's just what is taking place out there and how it is that I'm going to be positioning myself to deal with it. I don't listen to people who say that the dollar is done. They have some really, really good information. But to say that cash is absolute trash and we are going to have an absolute failure from here are going to miss it. They're going to miss out on opportunities because, just understanding stuff like this, how much demand for dollars that exist outside of the United States, not too many people even think that. Not too many people even know that exists, right? All right, we got 84 likes. Come on, we're almost there. We got 16 more likes and we'll be at the 100. Trucking, got my chips cashed in, keep trucking. That's exactly it, It's all about grinding, constant. Fed won't pivot this year. I'm not saying that they won't. I'm just saying that it doesn't seem very likely. Not to me. Even from their own projections on what they feel inflation expectation is going to be into the future, they had a 2% target. Even if we were go back and think about the 2% target, I got to go back to work. But if we think about the 2% target from back in the day, even from their own projections from the Federal Reserve right now, with the inflation expectation as it is, it's still above 2%. They're talking 3% inflation for the next 5 years. Or at least that's what a lot of the market is anticipating. That is not achieve their 2% target. That's still above their target, right? That means they have to be non-accommodating in order to get that 2%. So to me, the Federal Reserve is not in a position in which that they would even want to lower interest rates. That's their ammunition. Why give it up? The economy is not in bad times, right? In fact, there's not even really any kind of signs of there being bad times when you think about the unemployment levels, right? That's really where most people feel the pain, is that they don't have a job, they don't have income. But that we're not experiencing that right now. The Federal Reserve is saying, man, look at this. We got a slowdown in the economy. Unemployment's up. We have our Fed funds rates up there. Soft landing, recessionless recession, whatever, man. It's just the idea of lowering rates right now, I don't see it. Why would they give that up? Until there is actual bad economic times, people are losing their jobs, I think that they got this economy right where they want it. All right? Okay, I gotta go. I would love to sit out here and keep talking. We had a great live stream yesterday. Last night, I couldn't believe it. It was like 11 o'clock, and we had over 200 people watching the live stream. If you're really enjoying these live streams, if you really enjoy some of the content that is coming out, and being able to ask a lot of these questions, you should consider joining the channel, becoming a member of the channel. I'm going to do live streams twice a week on Wednesdays and again on Saturday, where the community is a lot smaller. We are very serious about this subject. We talk and share ideas and opinions. We break this stuff down so that we can all understand it. And by having that smaller community, it gives you the chance to actually engage in a way that is going to be more meaningful. Like a lot of times, even on these live streams with 166 people watching right now, we got it up to 100 likes. Thank you so much for doing that for the channel. But even when we have this many people in here, it's hard for me to go through and get all the comments. It's hard for even like a lot of the people within the comment section to be able to answer a lot of the questions that the viewers may have. When we take it down to that smaller membership only live stream, it is a much tighter community, and we definitely address a lot more of the comments and concerns and the opinions of the viewers, and I'm able to address those things a lot easier, than having these bigger live streams like they are. So yes, definitely please consider joining the channel. It's only $1 a month. Like, I mean, it's not even, it's like an insignificant amount of money. The only reason why I even did it is so that, it would be, it would only be the most serious people who would come into it, those who really want to understand this stuff. And I can imagine like this membership, like people would be getting in and out, like people who might be trying to learn a particular part of the economy, something that they might be confused on, might join the channel for a little while so that they can engage in those live streams, get those answers, those questions answered, and then maybe not be part of the channel anymore. Like, I mean, not be a member. Like, I could see stuff like that happening, like where we might have a revolving, membership base, or just a growing membership base, depending on how well we perform it. So anyway, I want to throw that out there for all the viewers to go and check out. We have that membership only live streams, which are just a ton of fun, and I really encourage you all to go check that out. Okay, I got to go back to work. Uneducated Economist, you let me know.